My name is Ishali Mulchandani, founder of IDM Chartered Professional Accountant. Hello tax netizens, welcome to our very first episode of Tax Talk series. It's a weekly web series that picks a topic of discussion each week to help you make tax very easy. Our topic for discussion today is travel expenses. A lot of the times, clients are not sure about what travel expenses they can write off and what they cannot. Obviously, every write-off that you take is going to help you save more tax dollars. So we're going to start by the different kind of travel expenses that you're going to have. One is the most common one, which is your car. There is also travel expenses for public transport, and also there is travel expense for when you get on a plane or you're traveling actually somewhere for business. So let's get the more simple ones out of the way first. So let's say you're traveling for a course to a different city. Make sure you keep your receipts so you can offset those air travel expenses right from the moment you leave your home, your Uber, your travel. When it comes to meals, that's a gray area. I generally want to take a position that when you're traveling, you can offset half of your meals, because even if you were here, you would have eaten those meals. So that also is a part of your travel, your accommodation. And again, if you are taking your spouse with you, then their travel journey is not going to be tax deductible. So a lot of my clients take their spouses because they're going to book the room anyways. It's not per person. If they conduct their business, they can offset the entire trip, with the exception of the spouse's airfare. So that's the travel expense when you're traveling to a different city. The second kind is if you're using public transport. Now, whether you're using public transport or you're actually getting in a car and going, do understand that home to place of work is not tax deductible. Let's say you have an office. From there, if you're going somewhere to see a client or to conduct your work, those travel expenses are deductible. Now, we will talk about use of home as office in another series, but so if your office is at home, like you have a home office, and then from there you're going to see a client or you're going somewhere, those expenses are perfectly deductible. So let's say you're getting, you're taking an Uber or you're going, by public transport, those are. But with regards to car, I want to help you clearly understand how you can claim your car expenses as a valid travel deduction for your business, against your business income. So there are two ways. One is you keep all your receipts, your gas, your repairs, insurance, and so on and so forth. And also, whether if you own it, then we take depreciation up to $30,000. If you lease it, then there is a limit on that as well. But we are not able to deduct 100%. It's so important that you keep a log of, for example, your mileage. What you can do is say, okay, you went from this place to this place, this many kilometers. So keep a log. It's easier to keep a log as you go along rather than do it retrospectively, because if you have an audit with CRA, you can prove, here are my travel kilometers that I did. So let's say you drove your car for 20,000 kilometers in the year, of which 15,000 are business use. There needs to be a log of those 15,000, and then that portion we can offset as your travel expense. Now, if you are not keeping receipts or you haven't, you can still claim it. As long as you have a log, you can claim 59 cents per kilometer for the first 5,000 kilometers, and after that, it's 53 cents per kilometer. So you can, in some cases, we've known that for clients, it's better to do this approach versus keeping the receipts. So you have two approaches for car. Either you keep the receipts and you claim a prorate off it, or you do the just only pure mileage. Now, a lot of clients would love to do 100% deduction. Well, I wish you could, but you cannot, because it's a given that if you have a car, you are going to use it for personal use. So, if you do 100%, it's just going to be red flagged. You're just going to get reviewed. So, let's try not doing that. The log is a good way, percentage-wise as well. If you don't have a logbook, we take it. But again, it's risky. If CRA challenges you, it could be denied. So these are the little tips that I tell my clients to be able to offset their travel expense. A lot of the times when I look at the numbers that clients give me, they don't claim it. and it is a very claimable expense as long as you can validate it. So this is all I have for you today for travel expenses. I would like you to stay tuned. The next one we're going to talk about is use of home as office. Thank you for watching. Have a wonderful day.